Are we in the midst of a new bull market and earnings cycle, especially for many of the lagging areas of the index? That was your call in mid-November. Is that a call you still stick to?
Yeah, well, good afternoon. First of all, I would say yes. I mean, the story we actually started writing about in May of last year, which was our mid-year update, was exactly that. I think our view still remains out of consensus around this idea that Liberation Day marked the end of what we call a rolling recession. So we're actually not only in a new earnings cycle, we're in a new economic cycle. And that's why we're seeing the broadening out now, because there have been many parts of the economy that have been sort of mired in a recession for the last 3 years or so, and they're just now starting to emerge. Areas like consumer goods, some of the financial sector, industrials, obviously, which is getting a boost from AI CapEx, but also getting a boost from, basically underspending for the last several years. Parts of technology are still doing quite well. And so that broadening out is the real story. And we doubled down on that in November because the evidence was coming through. And, in May, we didn't know, but now we know. I mean, the earnings growth for the median stock in the Russell 3000 is now running double-digit growth year over year. That's the first time we've seen that in 4 years. So it's happening. The question now is, how long can it last? What could derail that? And, what do you pay for? I mean, those are always the questions. But the first part of your question is a resounding yes. We are in a new earnings and economic cycle, and the market has figured that out.
Hey, Mike, it's been pretty remarkable to see that we've gotten this tremendous stock volatility at the single stock level, also at the sector level. But when you look at the S&P 500, it actually hasn't really done much this year. What is it going to take to break us out of this range? And what could be the catalyst to get us past that elusive 7,000 level that everyone's waiting for?
Yeah, that seems to be the question. I mean, obviously, stock investors don't. I mean, if you can make money in other areas, that's fine. I think that's the real main message, is that the market is not going anywhere at the S&P level, but there are many sectors that are doing well, and that's the name of the game. Now, to your question, I think what's going to break us out ultimately are two things. Number one, there is some uncertainty around the AI CapEx cycle and the disruption that perhaps it could cause in the labor market and other areas. So I think we're in one of those testing periods now. We wrote about that this week. We think that ultimately it's a little bit premature to kind of throw a cold blanket on the AI cycle. It's just getting going, from our standpoint. And then secondarily, I think we have a new Fed chair nominee with Kevin Warsh. And the market always tests the new Fed chair, whoever it is, when they come into power or office. And so first we have to go through the confirmation hearings, and then we got to learn a little bit more about what he really intends to do. So that could lead to this, the market kind of struggling for another month or two. And then ultimately, we think once he takes office, we think that'll be another catalyst for why the market can have a really good second half. And we stand by our $7,800 price target for the S&P by the end of this year.